All right, let's get started. First of all, thank you for spending the time on a Friday afternoon. I do think that if you are serious about being able to build your wealth with a proven system and trade stocks, an exciting group of stocks, then you're absolutely going to be in the right place here today. Just before I get started, how many of you are at a market gauge webinar for the very first time? If this is the first time you've been to one of our webinars, please just give me a first time. And if it is, I don't know, second or third time, then second or third time makes sense. Wow, welcome. Salvatore, Jeffrey, Brian, Sandy, Linda, awesome. Dolly, awesome. A long time ago, Bert, yeah. All right, great. Just quick question: is this a good time? Friday afternoon. I'm always, I tend to do them Thursday evenings, but I do like to mix it up sometimes. And I realize that for some people, the middle of the day might be better. So, all right. This time is okay. Prefer the evenings. It's okay for me. Flexible. Awesome. All right. Well, I will probably continue to mix them up. And in any event, I really appreciate your time. I really appreciate, as I will say in this presentation, I appreciate the fact that you are trying to make yourself better. And I know that could sound kind of cheesy to some people, but the fact of the matter is that we do a lot of education here because we enjoy the education part of it. And so it's always more fulfilling when, the person we're talking to really is out to make a change. And I've got something here today that I really do believe can make a big change in the right person. And the whole point of these webinars is for you to identify whether or not you are the right person. So let's dive into it. Let's get started. I need to first kind of clear the legal air by making sure that you understand that I am not a licensed financial advisor, and for that reason, access to this webinar is for educational and informational purposes only. Now, in this webinar, I am hopefully going to cover a lot of areas for you. I hope I'm going to show you how you can make more money in bull markets. I hope I can show you how you can avoid getting hurt in bear markets. I really hope that I can show you how you can feel confident about building your wealth with stocks. That has been my driving mission for myself and for helping others. Really, if I just count myself in there, since I was in high school in the 80s. All right, so I really love this inside and out, and I hope that for the right person, I can instill that in them as well. I hope you can enjoy active investing without a big time commitment if you don't want to spend a lot of time on it. Personally, I love spending time on it, but I know a lot of people don't have time, and this presentation is all about how you can do it without a lot of time. I hope that you'll be able to see how you can build a bigger nest egg. You can feel more confident in your retirement. You can have more peace of mind. And for a lot of people, you may be just doing this so that you are able to leave more or provide more for others. Now, this particular presentation is one that is perfect for a brand new investor. You can learn how to become a better active trader, how to trade in a professional manner, and do it while you're building your wealth. And it's also perfect for experienced traders. In fact, what I'm about to show you is used by professional asset management to manage money for other people. So it doesn't matter whether you're an expert or a brand new person. What I'm about to show you could fit into what you're trying to accomplish. Now, if you are just getting started, what I'm about to show you might seem like it's somewhat of a get-rich-quick idea because of its simplicity. But I want to head that off right here at the pass. I mean, if you've been trading for years, you know that there aren't any free lunches on Wall Street. If you've known Wall Street for any amount, if you've known market gauge for any amount of time, you know that we're not an advocate of the idea of get rich or free lunches on Wall Street. And in fact, my way of expressing this is 6 months. If you're starting anything new that is of any significant consequence, to think that you're going to be able to master it and really get comfortable with it in any time less than 6 months is most likely unreasonable. It is very easy to get started trading. All you need to do is put some money in an account and hit a buy button, and you're a trader, you're an investor. That's all it takes. It takes about that long to become a frustrated, losing trader too if you're not careful, and we don't want that. All right, if you think about what you do for a living, what you used to do for a living, something that you really feel passionate about and took any amount of effort to achieve, if someone came up to you and said, hey, I want to do that too, how long would it take them to get where you are? All right, now, everybody doesn't have to get 30 years under their belt in order to be successful at active investing, but you have to do it the right way or success will be fleeting. And it takes seeing how the markets trade over a certain number of months. It takes doing things the right way in order to know that you're doing things the right way. So without going on and on and on, please, as easy as I'm going to make this out to be, understand that if you really want to build something that has a lasting effect, give it 6 months. Whether you do it here or you do it somewhere else, you'll be much better off for it. Now, we'll make it very easy for you to give it 6 months, but we'll talk about that later. All right, one of the things I really love about this strategy and sharing this strategy is it's a little surprising when you think about it, and I'll point that out. It's surprising in that, as I've been saying in the marketing, this beats all the major indexes. It beats the Qs, which are far and away the most successful market index. That's where, you know, all the big tech stocks that are so popular and well known are, and yet this little idea outperforms it. It beats the S&P 500, the gold standard. It beats the IWM, or the Russell 2000, small caps, more volatile stocks. It beats that too. And it's perfect for right now. Now, when you see the results and how this is done, you might be saying, well, it seems to be perfect for every year. But it's perfect for right now. And actually, this is what people are talking about right now, because the market or the economy, the administration is very growth focused. And this is very growth focused. All right, so if you're just looking for an opportunity to collect dividends or collect a regular fixed income paycheck, then this is absolutely not for you. We're going to be talking about stocks with high growth that enable you to take advantage of market price action that could be volatile. You'll see that as a good thing. It's also, hopefully, this presentation going to show you how you can navigate confusing news flow, which, like all politics aside, there has never been an administration like a Trump administration for creating unpredictable news flow. So if there's one thing we can be sure of, it is that there's going to be a lot of confusing news out there, and I don't want that to drag down or frustrate your investment performance. All the time, it doesn't matter who the administration is. Markets are counterintuitive. They do things, they move ways that most people would not expect to be logical. When you understand how the markets work, I would say 95% of the time it makes sense. It's just that the sense that it makes is not common sense for the person who's not familiar with the market. So I hope that if you're brand new or relatively new to the markets, by approaching it this way, you'll be able to see how the markets respond to this confusing, volatile news flow and have a system that's going to guide you through it, so that you can take what you're doing with this and apply it to other areas in your investing. Now, if you are here for the first time, again, thank you for coming. Congratulations. You picked a great webinar to get started with Market Gauge. And I'll just tell you quickly where I'm coming from. I'm the one doing the presentation. I'm a co-founder of Market Gauge, but I have two other partners, Keith and Michelle, who you can see below my picture there on the right. Keith was trading on the floor in the 70s, Keith Mish in the 80s. I joined them on the floor in 1990. Decades of experience have gone into what I'm about to show you. Keith and I, in the mid-90s, traded for a hedge fund by the name of Millennium Partners. It still exists as one of the largest, most successful quant-based hedge funds. Keith and Mish manage assets for Market Gauge Asset Management. It's a sister company of MarketGauge.com. So if you are interested in just having assets managed, check out MarketGauge.com. And you may have seen Mish on any of the major news outlets. She's on Bloomberg and CNBC and Fox and Yahoo and probably a dozen different outlets every single week. Now, we are completely online, but we are not faceless. We do make every effort to be easy to be reached. Of course, you can get us at email at info@marketgauge.com. That's where we send most of our email from also. So if you white label that, you'll be more likely to get it. But you can always get us in live chat. And if it's not live, it immediately converts to an email that is first on the list or the queue the next day, and often read over the weekends and at night. You can get us at the office at 888-241-3060. If you have any account questions, if you want a free strategy call, Rob has been working with us for over 10 years. He's been working in the industry for probably over 15 years. He trades himself. He knows our approach to the market inside and out, and he would gladly sit down, assess your situation, and see if there's anything that we can do to help you. I talk to customers a lot, and oftentimes the conversation starts with, in fact, this just happened yesterday, it starts with, Rob's been great. So I encourage you to give him a call. All you have to do is go marketgauge.com/call to schedule a time, or that's his cell phone number. So please don't call it late on East Coast time, 407-770-7637. So we would like to believe that we're very, very reachable. All right, so I have a question for you. What are you looking for? Not necessarily just in this webinar, but in your quest, in your looking around for ways to build your wealth with stocks. Are you looking for something that's an alternative? And if you just put this in a questions box, I think it'll help you. It helps me in terms of knowing what I might emphasize as we go through. Are you looking for an alternative to the indexes? We always compare our performance to the SPYs, to the Qs, to the Vanguard Balanced, to the IWM, but you know, in the back of my mind, I'm always thinking, nobody's doing that. Nobody's just taking their money and buying the QQQs or buying the SPYs, but maybe you are. Are you looking for an alternative, which means if you don't do something else, you're just going to take your investment and put it into one of these indexes. Not that there's anything wrong with that. I'm just curious if you're looking for an alternative. Or are you looking for a better way to make money in the markets just than what you're currently doing? You're not necessarily going to go into an index, but you have an approach and you're looking for a better way. Or maybe you don't have a way, and in that case, you're looking for a better way than just sitting in cash. Or are you just looking for an additional strategy? Right? You're happy with what you have going on, and you're looking for an additional strategy, which we would always advocate. We would never advocate that you have all your eggs in one basket to steal from the stereotype. So if you just give me an alternative, better way, additional way, you could put more than one of those if you wanted. That would be helpful for me. And I ask these questions and encourage you to be engaged. One, because I know you'll get more out of it if you're engaged. And two, I think you'll remember when we get towards the end, what was I hoping to get out of this? And did he help me get closer to that? And that's my objective. And at the end, I always ask if there's any feedback. You're likely to give me better feedback if I've managed to keep your attention for the whole presentation. So just to get started and give you a little sneak peek into, and thanks for the feedback, thank you. So far, I don't have anyone, I think, saying that they're really just invested in the index funds. Okay, it's kind of what I was suspecting, but if you're out there, let me know, because I'm curious. All right, so would this work for you? What do I mean by that? Well, this green line is the system that I'm going to show you that you could participate in. This kind of orange line behind the yellow line, they're basically the same thing at the rate that they are on this chart. That's the IWM. So this is the small cap, like the small cap index that everybody looks to as the benchmark, that IWM. And as you can see, what I'm about to show you has done over 900% at a time where the IWM has done, like, I don't remember the number exactly, 68, 70%. Now, the reason I'm comparing it to the IWM right now is because we're actually going to be looking at stocks that are in the small to mid cap range. Okay, so that's what's coming. Let's talk about why most traders fail. And when I say fail, I just mean they don't live up to the expectations that they have, assuming they're reasonable expectations. Maybe they lose a little, but I don't necessarily mean you're going down in flames. You're just frustrated. You wish you could do better. Well, most of the time, that is in some ways a result of they're just looking for the wrong answer. Now, admittedly, as an instructor and a teacher and a service that sells products to help people learn, I'm as guilty as a lot of people out there at saying that I've got the right pattern, I've got the right indicator, I've got the right strategy. But here's the difference. I'm not going to tell you this is all you need. All right, it's not all you need. You need to understand how the markets work. You need to understand why you're doing what you're doing if you really want to be successful. All right, so this would be like, and this is probably a terrible analogy, but this would be like me handing you a hammer and then having you go try to build something and giving you some wood and some nails. Yeah, the hammer's all you need to bang in the nail, but there's a lot more that you need to really understand in order to make something big. There's a lot of mistakes you can make even with a simple hammer that can ruin the whole experience, right? For one, if you don't nail it, if you don't have a good swing, you could bend the nail and then the whole thing's gone sideways. You can get hurt. All right, there's a lot of mistakes you can make with something that simple. Point is, yes, depending on how you're approaching the market, you should have a pattern. You should have a setup. You may need an indicator. You should have a strategy. You should, and while all those things may be required and may be the one thing that you need right now, it's also not the only thing, okay? And I hope that by the end of this presentation, I can give you a much more holistic demonstration of what it takes to build something that takes care of the whole problem, all right? And so when I say that we're here to help people solve the whole problem, here are just a few examples in terms of how we've gotten some feedback from people who have seen this. So Lloyd writes, you've helped instill the confidence I need to trust my decisions, and for that, I'm truly in your debt, right? That's not, hey, I made a gazillion dollars trading this option that you told me to buy. No, this is a guy who now feels confident in how to trade, and I can tell you from the fact that I know him that he is not only confident, he's a really solid trader. He's in our mentoring group, and he comes up with great ideas all the time. He gets it. And I have a more of a quote that led up to this later in the presentation. And Greg's the same way. Greg says, it has helped me see a crystal clear view of the market and understand how it works. My confidence is unshakable thanks to you. You also taught me patience. Patience, you see, is very much a function of being confident. All right. FOMO, does anybody ring a bell with anybody? Let's say goodbye to FOMO and hello to patience. All right. So let's get started in how you're going to do this. All right, I'm going to show you how to find stocks that have strong and durable trends. Now, when I say durable trends, I mean persistent. I mean trends that when they pull back, they then reassert themselves and make new highs. Right? When you're trading this kind of market, you have much bigger trading opportunities for both the new and experienced traders. More often than not, when you're trading these kinds of trends, your returns will come faster. And I would say most importantly, when you're trading durable, big trends, they're just much more predictable. All right. And so that's why we focus on them. And so what do we mean? What do they look like? So here's some daily charts. I just took these charts literally, or these stocks literally off our current list a week ago. We did change the list since then, but it doesn't change completely. So these are the types of trends we're looking to be trading. All right, so if that's scary looking, then hang on. If it's exciting, then you're in for a treat. But you can you see how I'm saying these are durable trends? I want you to take a really close look at this trend. EAT is the symbol, because I'm going to show you something about EAT coming up. All right, so notice how it had this big move up and then it sold off, right? This sell-off is from about 75 to under 60. That's not a small sell-off. 15 on $75. It's more than 20%. Anyway, let's go to the next one, LRN. All right, so this one has a big hiccup, right? What did I say about durable trends? They have the ability to come back fast and strong, right? That doesn't mean they're never going to go down, but they're in the right place. You're in the right place if you know how to trade these. These are big opportunities, right? This is 50 to 100 in 4 months, all right? Now, the market certainly didn't do that in those 4 months, right? These are big opportunity trends. Here's 20 to 40 in 6 months. Right? Now, yes, we had a good run from July of 2024 to where we are now, but not that good on the overall market, right? So why are these stocks doing this? We're going to learn about that. All right. So I'm going to show you how to identify these trends, and then, as I just said a few minutes ago, the success in trading isn't just in finding this pattern, finding this magic indicator, right? The success comes from being able to combine that with a proven, successful way of managing your risk. Trading, active investing is really a game of managing risk, all right? When you understand that, when you understand how to do that, then almost any good pattern, any decent strategy, all right, almost any indicator can be, I'm going to say, turned into the one thing that you need. But that's not the secret. The secret is putting the two together. And so what I like about what I'm about to show you is we are going to give you the managing your risk part on a silver platter. All right, we're going to give you the step-by-step process for maximizing your profits and limiting your losses to avoid big drawdowns, which really, that's the secret to long-term success. All right, now in order for that to actually work day in, day out, year in, year out, it's our firm belief that it needs to be simple. You definitely need to be able to repeat it, and it needs to be simple, or you won't be able to repeat it consistently and simply, right? Now, when you can do that, you can get returns that look like this. All right, so this is just a different view of the same returns I was just showing you. Since 2017, it's been up 938%. At the time, IWM was up 70%. The S&P 500 or SPY up 168%, and the Qs only up 339%. Now, I wouldn't be saying only up 339%. If I was just comparing the Qs to IWM, I'd be saying that's 3-4 times better, all right? But this is almost 3 times better than that, all right? And what does that mean in terms of dollars and cents? It means if you put $10,000 into an account and let it sit there since 2017 and it was in IWM, you'd be up about 70%, and that would give you about $17,000. If you'd put it in the SPYs, you'd have about $26,000. If you'd followed what I'm about to show you, you could have had about $103,000. All right. So even if you did half of what this system enables you to do, you'd still be twice as good as the SPYs. You'd still be 50% better than the best index. All right. Now, how are we doing this? Well, as I just said, we are taking the ability to identify strong and durable trends and focusing on that. But it's not just price action. One of the secrets to the success of this system is that we have other factors than price. We have an earnings filter. So we have a couple of different earnings criteria. And for earnings, we use the Zacks data. Now, the reason I'm saying that is because Zacks has been around for decades. It's one of the most highly respected sources of data, and it has great ways of being able to see inside earnings trends. Now, I'm not going to bore you with which measures we're using and what those measures use, but I just wanted to as part of being instructional, like generally helpful, I want to tell you or really demonstrate what I call the dirty little secret about earnings, because even I will say that earnings are what really drives stocks. I mean, we're all about momentum and looking at indicators and leadership and everything. You could go and listen to Market Gauge webinars for years and not hear us talking about earnings. Because the truth is that if you know how to read the charts and listen to what the chart is saying, you don't necessarily need to know what the earnings are doing. But for this system, we include earnings and a condition in the several conditions in the earnings. And so I wanted to just dispel a myth about earnings, which is that just because the earnings are good, just because earnings are in strong trends, even if you've got earnings surprises, right? So a lot of times you'll hear people say, it's not the earnings, it's whether or not the market expected the earnings to be this good. And that's what's going to drive the stock one way or the other, which is all true. It's totally true. But look at this stock here. Now, we just bought this stock. We bought it in around here. We just took profits today, up about 20%. I think we're going to look later. But we just bought it here, right, at this time frame. But see these green arrows? All these green arrows are indications that on that date, it had a positive earnings surprise, all right? So we had positive earnings surprises. Those are the green arrows. These dotted lines here, that's the earnings estimates for a particular time frame. You can see the time frame up here, right? So earnings estimates going up, not here so much, but here, earnings estimates going up. And yet the stock price is going down. This is what drives me crazy when I hear people say that I'm going to buy this stock because it's making a lot of money and the earnings are great. And that's all you got to know. All right. It's not all you have to know. And this gets back to that markets are often counterintuitive. So what seems obvious now is that, you know, we had a lot of good things to be thinking about with earnings in here. Then the market for the stock seemed to kind of slow down on the going down part. I mean, it didn't have much further to go down. It was already $2, but aside from that, and then it started going up. All right. So remember, we're looking for stocks that have strong and durable trends, and this is one of the reasons. You can't just look at one factor of earnings and think that because earnings are the things that drive the stocks, you're good to go. If you do that in a vacuum, you will be sadly disappointed. Now you might say, well, if I had waited it out, okay, well, if you had bought it back here when it looked like it was heading higher and earnings were looking good, you would have paid $6.50 and then gone all the way down to under 2. All right, that's pretty much you're totally wiped out. And now you're just getting back to it about 3 years later. All right, so if that's the way you want to approach using earnings, I can't stop you, but clearly I would not be recommending it. All right, here's another one. This is the stock I told you to look at. This stock when we were looking at it a few minutes ago. This is EAT or Brinker, and it's similar, right? It had strong earnings, surprises here. Now earnings estimates were dropping, so that's not surprising that it would be selling off from that perspective. But then we had surprise, up surprise, up surprise, up surprise, up surprise. Jeez. Up surprise, now it's finally getting going. All right, now it's finally getting going. We bought it in here. All right, now keep in mind we have a number of different factors, but we're buying it because the trend is now getting strong and the earnings picture is also strong. All right, so yes, earnings are very important, but you also have to time your entry with the right price action. Right? Because remember, markets are counterintuitive. They don't do what most people expect them to do. All right, so if you want to approach the market as a source of building your wealth, here are a few things that you need to consider. If you want to do it the right way, you want to have a way of looking at the market. Identify a market environment that you know and like and trust, right? So what do I mean by that? I'm showing you a very specific way to identify very specific stocks and trade them a very specific way. So know that what you're doing specifically. And the reason for that is because if you do that, you will have an edge. You'll understand how that game is played, because trading for dividends or trading value stocks is very different than trading growth stocks, and we're trading growth stocks in an uptrend. All right, so identify your environment and really understand that environment, and you will have an edge. Now in that environment, you're going to want to use a strategy that exploits that environment. So don't take a growth trading strategy and try to use that for value. All right, here's a great example of that. If you're trading value, you're probably willing to buy it and hold it for a long time. You're trusting your judgment on the value of that instrument, and if it goes down, it actually becomes a better buy because you're trusting that you understand something that the market is not getting right now. And in doing that, you're probably going to need pretty wide stops. Well, if you have tight growth-like stocks on a value system, you're just going to keep getting stopped out. It's not going to work. All right. So you need to have a system that works for the environment and the condition that you're trying to trade. Finally, you need to master the tactics that work best in that environment. All right, so you need the environment that you're interested in, the environment that works. You need a strategy that works for that environment. And then you need the tactics that are going to enable you to truly manage your risk for that approach. All right. So if you don't put all that together and you don't understand all that about your pattern, your indicator, your strategy, then you're going to have a hard time making that pattern, that strategy, that indicator work. But if you understand all that, then it can all come together. All right. So you're not going to need to know all that for what I'm about to show you, because I'm going to put all that together for you. All right. And my hope is that even if you are interested just because you don't have to do much, that you'll walk away really understanding what you're doing, because that will make you more successful at executing it. So let's talk about what we're doing and putting all the pieces together. First of all, as I said earlier, we're going to be trading small cap stocks, generally less than $1 billion. They are going to have enough volume so that it's not like penny stocks and completely illiquid stocks. And as I've been saying, we're going to focus on stocks that have solid earnings growth expectations. They also have to be top ranked by Zacks. And the result of that is based on the strong belief and data generated support that stocks that have expectations that earnings are improving are some of the most reliable and potentially explosive opportunities in the market. All right, and we're going to combine that with leading trends. So it doesn't just have to be a strong trend, it needs to be a leading trend. All right, so why are we using small caps? All right, well, these, and this is why it's such a perfect strategy right now, because these are the companies that have the greatest opportunity to grow into massive valuations, have much bigger change. The law of large numbers is just that the bigger you get, the harder it is to double that number, right? So small caps and mid caps just have this inherent ability to have bigger moves, and they are more volatile, right? So you do need to know how to adjust for the volatility. These companies also tend to be where you'll get these undiscovered ideas that just blossom into big trends, like the ones we saw, right? And finally, nimble, small, successful companies, these are good investments in bull markets and bear markets. Now, yes, in bear markets, sometimes they can get hit just as hard as the rest of the market, but sometimes they completely avoid the bear markets for the longest time. So you've got a really rock solid chance of having a great year in a bear market by just being in the right environment with the right strategy and the right tactics. All right, and one of the ways to do that is in small caps that have great earnings outlooks. Now, in addition to Zacks and the earnings data, we also have a proprietary filter, which is our trend strength indicator. All right, we call it TSI, and you can see it on this table here. TSI is simply a calculated number that's telling us how strong the trend is. The higher the TSI, the more durable the trend is. If you have a negative TSI, we will never buy it. All right. So we're not going short based on TSI, but we are definitely not going long if it's negative. And then we use TSI to basically rank the stocks. So we come up with a list of about 50 stocks every month. 30 are shown in the member area, and then we rank them by TSI, and that's what we're going to trade, the top TSI. So we've got good trend, we've got good earnings, and we have the leaders, and that's why they outperform. All right, so here's your trade plan to make that all happen. Any questions before I dive into exactly how we're doing it? So reading some feedback here. Oh, thanks, Dan. Yeah, that's a good idea. Dan is saying we should show these results in a log scale, so it makes it easier to see. He's also saying everybody should check this out and start with, hey, you're giving away my secrets, right? Before I'm able to tell them. So I'll say thanks, Dan. So Dan is a very experienced trader, and his advice to start slow couldn't be more appreciated. Anyway, back to the presentation. Dan, I always appreciate it. So here's what I would describe as a done for you trading plan. I've already set up where you're going to get your stocks, right? So you don't have to go looking for stocks because these stocks are very carefully curated, right? From the universe of several thousand, when you boil down what you would actually trade with volume, we're identifying the volume component, we're identifying the earnings component, and then finally we're ranking them by TSI. And what we want to be in are the top 7, right? So that's basically the strategy. How can we be in the top 7 stocks and manage our risk so that we are in the ones that go and we're out of the ones that don't? Because remember what I just showed you with the earnings, just because they've got great earnings doesn't mean the price is going to go up. And remember what I showed you with the trend, you can have a great trend, but it can have a pretty severe pullback. We don't want to be getting ourselves in a situation where we've got big drawdowns, right? Because if you lose 50%, this is the easiest way to describe this. If you lose 50% of your account, you now have to double your account to make that back. And that's really hard to do. So the idea is you really want to avoid big drawdowns. So here's how it works. We'll trade the top 7 TSI stocks. We rotate into new positions each month on a specific day. When we do that rotation, we will actually have a live webinar presentation so we can show you exactly what we're doing. We can answer any questions. You can be mentored in any questions you have about the market, but certainly specifically about this system. We've got a stop loss of 20%. Now, the stop loss of 20% may sound high because it is. It is. That is a volatile stop, but we're trading volatile stocks, and one of our targets is going to be 40%, right? So we wouldn't take these same targets and stops and put them on stocks that don't really move. That wouldn't work. All right. So stop loss is 20%. So to Dan's point, if 20% isn't comfortable, then you trade smaller so that you are managing the dollar risk in a way that enables you to see the system work, to do the system. And by doing it, you will become more confident and a better trader, right? What's the best way to learn? It's to do it. All right. Now we've got 3 profit targets. I'm not going to give you the entire recipe, although you will get it when you become a member. But you got 3 profit targets, and every time we hit a profit target, we move our stop up. Right now, the secret behind the success of this system and the other systems we have just like this is this formula of what's the ratio of your stop to your targets, and how do you move your stops up, and when do you let it just run, and when are you rotating? It's all about how you manage the position, and how we manage the position is extremely similar for several of our models. It's tweaked for the type of stock that we're trading. So in the beginning, when I said numerous times that the secret isn't in the strategy or the indicator, it's how you manage your risk, that's what I mean, right? So conceptually, this is how it works. This is in a strong trend. We bought it here. We're going to take our profits here. We're going to take our profits here. We're going to take our profits here, right? And so the rate and our stop was going to be 20% lower. So I'm not doing the math really quickly, but it's not based on a chart. But so if this is our stop, then the value of that is going to be determined by the value of this, which is also going to determine the distance there, which is also going to impact the distance here. And that's how it all works. All right. You don't have to know all that, but you'll learn it. I mean, some people who are members, they know exactly where we're getting in and out because they've learned the math. But most people, they just use the open positions. And here's an example of the open positions. Now, this is actually open positions as of today. I wanted to give you an updated view, but please don't run out and just buy these because you see that we're in them. In fact, I told you PL, we actually took a profit today. Not surprising because look, it was 19% up 19%. I think this was before the market opened, or I guess during the day. So we just took the profit, not even reflected on this yet. All right, here's E. Remember I told you I just took these charts from what we're in. E, our return right there, we're up 47%, and it's a trailing stop at this point, which means we got no target. All right, but when there is a target, you're going to know exactly what to do next. Right, you're going to get out of, so I guess we sold EAT at 628 today would be my guess. That was our target that hasn't been updated yet. I know that when B bar here gets to 26.74, I have to sell it. If it goes down to 17.82, that's my stop. I'll have to sell it. Right now, when B bar gets to 26.74, this is what I need to do. I need to sell 25% of that position. All right, so we're teaching you how to scale out, and you're just gonna follow the rules, all right? And that's what I meant earlier when I said we're gonna show you how to be more confident. We're gonna show you how to trade, and when you see how this works, when you see, oh, this isn't so hard, I just need to get in at the right time. I need to put my stop at the right place. I need to have a target that makes sense relative to my stop and then move it up the way they do it. I can do this, and I can actually take this and apply it to other areas of my trading. You could do that, all right, if that's what you want to do. But if you just want it handed to you, here it is. All right, now our objective is to be able to have a closed positions blotter that looks like this. So this is an example of positions from a while ago. I'm going to show you some more recent ones coming up. But you can see that what we're looking to do is scale out. All right, this one ran nicely. We sold some up 20%, up 40, up 60. All right, we got out of this one at down 6%, but I told you our stop loss was 20%. Well, this one looks like it must have gapped down below that a little bit. We got stopped out. So why did we get out of this at 6%? Well, I told you every month we rotate. So this QB here must have fallen out of the top 7, but didn't fall 20%. And so when the rotation period came around, it gets kicked out of the portfolio and we pick up a stronger stop. All right, so just because you have a 20% stop doesn't mean you're going to take a 20% loss on a position that didn't really work. Make sense? All right, let's go to some more recent positions. All right, so here's some more recent trades. And you can see again, and so you can see the exit dates here, 24, 25, 24. The other ones were 23. The same basic pattern, right? A bunch of trades that we sold in 2 or 3 steps, and we do have some stops, and we have some that rotate out. But all in all, we come out ahead, all right, as I started. Now, as a participant in all this, you will get an email every time we're making a trade, even though you won't necessarily need the email because we get in the trades on the day of the rotation. You'll know when that's coming. There's a live webinar. Then as soon as we get into a trade, we will publish the stop and the target. So you'll always know exactly what you need to do next. You can have it resting there, but we will send you an email. We will send you a text. It'll look something like this when something's going on. So in this case, This is us saying tomorrow we're going to buy PL on the market open, because that's how we get into stocks. All right, are there any questions so far? Great question. If I subscribe today, would I buy EAT? I will go into the member area actually after we're done, and I'll show you how to handle that. All right, so we showed you that, and we're almost there. All right, so just a quick review of the trading rules to kind of pull it all together, because I pretty much covered it. The entry signals are all generated at the end of the day. We have a specific day of the month that we rotate in. You'll get an email and a text saying that it's that day. We will enter on the market open and exit on the market open if we're rotating. So there's no reason to watch the markets during the day. And actually, if we send out an alert during the day and you're busy, you're at work, our numbers show that if you were to just get out the next morning, you're going to have roughly the same performance. I mean, some positions you'll do a lot better, some you'll do a lot worse. In general, you'll do about the same. All right, so you really don't need to watch the markets during the day, but you can set your stops and your targets up to execute during the day. Again, we're only going to be in the top 7, and we're not going to sell a stock just because it goes to number 8. It's gotta move down further than that, because we don't want to be getting in, getting out, getting in, getting out, and creating turnover. All right, so I showed you a couple of different ways to look at the performance, and here's another way. How is it done each year? So the green is the small cap performance that I've been showing you, and orange here, brown is IWM, and here's the balanced fund, right? So you can see 2018 wasn't a great year for IWM. And the other thing to keep in mind here is IWM really hasn't been all that good in the last 7 or 8 years. It really, I mean, its best year is up 20-something%. But as you can see, we've had a 40%, a 40, a plus 50, a plus 70% year, even though IWM hasn't done that well. And you don't even need to look at the SPYs and the Qs to know that these are better years than the SPYs and the Qs. All right. In 2022, we were down. We were up the whole year until about the last month, and then it just plumped and sent us down 4%. But okay, nobody's perfect. The market was down 20%, 20+%. And the next week we came roaring back. In 2024, it was tough to keep up with the major tech stocks for sure. So we were up 10%. If you were to look at the Qs, obviously they were up like 30%. But that was the only year that we didn't beat the Qs, I think. This year, we're already up 11%. So no promises, okay? Like, we're off to a great start, up 11%. All right, so if I put all this together, here's what you'll get in order to do this yourself, although yourself really does involve a lot of help from us if you want it. You're going to get the small mid-cap system, right? This is a system where we've designed these rules. These rules are a result of years, really decades of experience, and you'll be handed everything you need to follow it. You're going to get the ranking of the 30 stocks that we're looking at to identify the potential positions. So if you like to trade from a discretionary standpoint, this is a great list of stocks. They're all trending, right? They all have good earnings qualities to them. We are doing the top 7, but as a discretionary trader, when I look at this list, I look at the whole list, right? As long as it's not negative, I look at the whole list, all right? They're great opportunities. We could sell that as its own alert service, but we don't. All right, you're also going to get all the alerts sent to you via text and email, again, even though they'll also be listed in the website, so that's just a bonus. VIP member satisfaction support. Like I said, we pride ourselves in being attainable or reachable. live chat, email, 2 different phones. You can schedule a personal Zoom with me. We've got live mentoring, which is coming up. All right. In addition, our feeling is that if you want to do this with someone in your family, we have a lot of people who say, hey, you know, I'm interested in doing this with my spouse. I'm interested in doing it with my kid. I'm interested in doing it with my grandkid. Sure, let us know. We'll give you another login. You can do it together. Additionally, we have a plan that you'll see in a second that we call the VIP lifetime plan that you can pass down to someone in whoever you'd like. All right. One-on-one private mentoring. All right. So there's 2 ways, and this was my pause. I thought the other one was coming up first. There's 2 ways that we will work with you live. The first is that when you become a member, I'd encourage you to schedule one-on-one mentoring. As I said earlier, I enjoy talking to people and helping them make sure they're getting off on the right foot, whether it's to get this off on the right foot or any part of your trading. All right, schedule it and we'll do it. 60 minutes. If you want to break it into 2 different sessions, no problem. We can do it any time of the day. If you want to do it during the market, after the market, we'll figure it out. In addition, every month, Keith does a live webinar when we do the new positions. So that gives you an opportunity to ask any questions you have about anything about trading, or to ask questions about the models. Plus, he'll go over what's going on in the markets. So, as I said before, we're very accessible in many different ways. So, if I sum it all up, you've got the system. You've got the stocks that we're watching to potentially be part of the system, to trade on your own if you want. We'll email and text you. You've got VIP member support. You can pass this on to future generations. You can share it with your people within your family. We're here for one-on-one consultation to get you started. You've got live monthly mentoring. In short, if I add that all up, when I say you've got done for you trade alerts, that's just the beginning. And VIP support and mentoring. And so with all this, we're able to offer 2 different guarantees. One is the 100% performance guarantee, which means if the system isn't profitable in the first 12 months that you have it, then you can get the next year for free. All right, but then we have the satisfaction guarantee, and this goes back to my 6-month conversation. All right, we ask that you give it 6 months. All right, we understand that everything isn't for everyone, but if you give it an honest 6 months and you still don't feel that this is the right fit for you, we'll let you take the entire 6 months and apply that to anything else. And we have a lot of different programs. So you don't ever have to worry about, oh, but I'm getting a prorated and I don't want to use it on this product. No, 6 months, and then you can start fresh, whole new year in something else if this turns out not to be the right thing for you. All right, we just ask that you're honest about the fact that you did give it an honest try. All right. All right, so you've got the system, you've got the list of stocks that you could use for more trading ideas if you wanted to do that. You get email and text alerts. You've got support from email, phone, live chat, me, Keith, Mary, Rob. You've got generational wealth, which means you can share this with people within the family. You've got 2 different ways to get personal mentoring. You've got everything you need if you want to approach the markets like a professional with a step-by-step proven system and learn while you earn, or just use it to let your portfolio grow. Now you can get started for a full year at $9.97 and do it at $9.97 per year, or we've got a VIP lifetime discount, which means that if you know you're probably going to use this for 2 years, then this is a no-brainer, because basically what we're saying is that if you sign up for 2 years, every year after that is 80% off, just $197 a year. All right, so All you have to do is go to marketgauge.com/small caps, and you'll see all kinds of information there that I've already covered here about what you'll get. If you've got any questions, you can also give Rob a call, and he's at 407-770-7637. That's his cell phone, remember, or just go to marketgauge.com/call and you set up a time with him. And he'll be able to answer any questions you want. If you already have some of our other services, want to know how this fits in, or you've seen some of our other services and you want to know whether or not this would make sense to make a bundle package, then definitely give Rob a call for that. All right, and finally, if you're a professional and you'd like to use this for your clients, you do need to give us a call. This is the individual plan, but we would be happy to enable you and help you provide this to your clients. And if you'd like the whole thing just done for you, you love the idea, but you don't want to be the one managing your money, give Rob a call. He can point you to the right place to find that. All right, so one last point. We talked about Lloyd and Greg earlier and where they were, but here's where they came from. All right, so Lloyd, when asked what was it like before Market Gauge, he said, well, I was mostly buy and hold. It served him well, or so he thought. And then the market tanked in 2021, and he realized that buy and hold wasn't all that it cracked up to be. And it was from there that he came over to the other side, and it was the description he gave in the beginning, which was that we gave him the confidence he needed to trust his decisions. And then Greg asked the question, what was it like before Market Gauge? And his response was kind of boing, boing, boing type of education, sort of grabbing at the most recent source of information. Nothing was working. All right, and Greg was the guy who said earlier in the presentation, you gave me the confidence and you gave me patience. All right, so if you've got any questions, lay them on me. Like I said, you've got two choices. If you just go to marketgauge.com/small caps, you'll find the opportunity to sign up for a year at a time at $9.97, or to get the lifetime VIP discount, which, like I said, is essentially recognizing that if you want to give this a real try for at least 2 years, then it makes absolute sense to go with the lifetime discount, because if you do that, every year after that is just $197. All right, and doesn't matter which one you choose, you still get the 2 guarantees. And with that, if there aren't any questions, I see some. So Salvatore, you're asking if we have any educational services that focus on income-oriented option strategies like covered calls. We don't. We don't have anything that's focused on selling premium right now in order to generate income. We are working on a dividend product, which is a little bit a different type of dividend product. It's not options. So if you're interested in something like that, give Rob a call. He'll put your name on the list for that. Butch, do we use options? We, yeah, Salvador. So if you give Rob a call or send him an email, Rob at Market Gauge, he's really going to be spearheading that, and it's a very cool dividend idea. We're not talking about just going out and buying, 3M because the dividend's 3%. This is cool. These are monthly dividends that come out every month, and we focus on like 6 to 12% return. And it's a specific instrument. I didn't think of it. It was presented to me, and I opened my eyes and said, wow, didn't realize this existed. But that's very far from where we are right here. If you're interested, give Rob a call, send him an email, Rob at Market Gauge, and we'll put you on the list that coming. Butch's question, can you do options on these? Some of them you can. The small and mid cap, the options You know, it's spotty is probably not the right way to put it, but there's not options on all of them, but there are options on a lot of them. We're not going to teach options though, right? So if you understand how to trade options, then yeah, this is a great list of stocks. You could find some explosive opportunities in there with options. But I would say I wouldn't recommend getting involved with this unless you really understand the options, if that's what you want to do. You're not gonna find options education in here if you don't already have that mastered. How many positions do we have at once? 7. Very unusual for us not to have 7. The reason is because we're always scaling out and we're rotating every month. So unless we go into a really severe bear market and TSIs turn negative, if the TSI is negative, we won't buy it. So if we can't find 7 stocks that meet all our criteria, we won't keep going down in quality. We won't have 7. But I don't know off the top of my head if that's ever happened. Yeah, Dan, that's good advice. You know, I'll post this because it's you probably said it better than I could. And so the rotation, Dan's point is the rotation is of monthly is a good way of like slowing down when the markets are going against you. So if you get stopped out, you would have less than 7 positions. We're not getting right back in to always have 7. You have to wait for the next month before you get in. So that is a good example of when we wouldn't have 7. All right, so I am working really hard on keeping these webinars as close to an hour as possible. Anybody who's been to like more than 2 of my webinars knows that that's almost impossible for me to do. So I see that we are 10 minutes past the hour. I feel like I've answered all your questions. I'll never leave anybody hanging if they've got questions. But if I don't have more questions, I am going to call it a wrap. What's the most convenient time of day for Rob to put in a call to call him? Salvatore, just call him right now, 407-770-7637, or text him and leave a message, and he'll figure it out. Or like I said, you can go to marketgauge.com/call. I'll put that in here. Marketgauge.com. And actually, if you go to the page of /small caps you see here, there'll be a pop-up there that will enable you to book a call with them, and then you'll be able to set your time with them. Rick asking, might you consider a bull put spreads on positions you're bullish in addition to buying calls on shares? Again, I would say if you're familiar with how to trade the options, absolutely. Like any strategy, any option strategy you would use for stocks that the approach to them is you're looking to be long because you feel like there's a big move, that would work. All right, so sure, bullish put spreads, long call premium. Again, you need to know how to do it, and Rick, you do. I'm pretty sure. So I just have to be careful not to encourage people. I don't want anybody to buy this, get involved with this, and then wonder why we're not teaching options. So Salvador, yeah, I think you were one of the people who said it was the first time, so I hope this was helpful. Seriously, reach out to us for whatever you need. You don't have to limit it to this conversation. We're here to help. All right. And Dan can't believe that I'm getting this done in under 90 minutes, I think. think that was a nice way for Dan saying nice job. So thanks, Dan. And Dan, thanks for the feedback. And with that, thank you very much, everyone. You know how to get us if you need anything, whether it has to do with this presentation or any other questions you've got about your trading. Have a great rest of your day. Have a great weekend. And hopefully we'll see you soon.